Hello there, welcome to David's Investment Analysis channel. I want to first say thank you so much to those who have been supporting me and watching my videos, especially the last one, Hyliion, where the results were beyond my expectations. And if you haven't had the chance to watch that video yet, I've linked it in the description below, so check it out when you have time. Today we're going to be talking about NIO Inc., traded on the New York Stock Exchange under the ticker symbol NIO. The stock price went up as much as 189% over the last 3 months, 109% the last month. Within the last 3 months, the stock went from as low as $2.30 to as high as $7.90. And the stock price at the end of today's close is $6.86. In the next bit, I'll talk about the company NIO and what they do, how they earn income. Then I'll follow up with a qualitative analysis looking at why the stock went up so much in such a short time. And then I'll look at the quantitative analysis looking at financials and valuations. Then I'll conclude on whether I think the stock is a buy at its current price and whether I own any shares of the business myself. If you would like to skip out on the introduction and analysis, I left timestamps below in the description, so you could go straight to the conclusion if you like. I do spend a lot of time preparing for these videos, so I would really appreciate if you could like, share, and subscribe. And if there's any other companies you would like me to cover in the future, please leave in the description below. Now let's get to it. NIO Inc. designs, manufactures, and sells premium smart electric vehicles in China, Hong Kong, United States, United Kingdom, and Germany. The company offers 5, 6, and 7-seater electric SUVs. The company provides users with comprehensive, convenient, and innovative charging solutions, including Power Home, a home charging solution, Power Swap, a battery swapping service, Power Mobile, a mobile charging service through charging trucks, Public Charger, a public fast charging solution, and Power Express, a 24-hour on-demand pickup and drop-off charging service. Further, NIO has a strategic collaboration with Mobileye NV, which is an Intel subsidiary, for the development of automated and autonomous vehicles and collaboration agreements with various manufacturers for the manufacture of ES8, a 6 or a 7-seater high-performance electric SUV. Now let's look at some of the products. They have NIO EC6, which is comparable to Tesla's Model 3 or Model Y, and a NIO ES6 comparable to Tesla's Model Y, and NIO ES8 is comparable to Tesla's Model X. Now let's compare some of the specifications. So right here we have NIO ES8 with a range of 580 km NEDC range, but if we convert this to miles EPA, it would be approximately 252 miles EPA compared to Tesla's Model X, which is up to 351 miles EPA. That's about 100 miles more. NIO's ES8's acceleration can go from 0 to 100 km, which is about 62 miles, in about 4.9 seconds. Meanwhile, Tesla's Model X performance can go from 0 to 60 miles in 2.6 seconds. Tesla's acceleration is a lot faster. The price of NIO ES8 is between $66,000 and $80,000 USD. Meanwhile, Tesla's Model X is between $75,000 and $95,000 USD. Tesla with a higher price tag, but does provide a better performance compared to the NIO's ES8. NIO's vehicles also have Nomi, an in-car AI system, and NIO Pilot, a driver assistance features that is powered by Mobileye iQ4 chip, and Mobileye is an Intel subsidiary that develops advanced driver assistance systems. Now let's look at some of the qualitative factors. Let's first look at the management team. Bin Li, Chairman and Chief Executive Officer. He was the founder and have served as the chairman of the board since the inception in January 2018. Li co-founded Beijing Pai Auto e-commerce co. and served as a director and president until 2006. In 2002, Li co-founded Beijing CNI Advertising Company Limited and has served as the chairman of the board of directors and chief executive officer since its inception. Mr. Li currently serves as the vice chairman of China Automobile Dealers Association, or CADA, and was recognized by CADA in 2008 as one of the top 10 most influential and distinguished people in China's automobile dealer industry in the past 20 years. Mr. Li received his bachelor's degree in sociology from Peking University, where he minored in law. Li Hongqun, Director and President. Mr. Li Hongqun is our co-founder and has served as our director and our president since our inception. Mr. Quinn received his bachelor's degree and master's degree in law from Peking University in 1996 and 1999, and a master's degree in public policy from Harvard University in 2001. Overall, I think the management team is strong. As suggested earlier, Bin Li, the CEO, is one of the top 10 most influential and distinguished people in China's automobile dealer industry in the past 20 years. Bin Li appears to be a successful entrepreneur as he founded Bin Auto Holdings Limited in 2000 and was sold in 2013. Industry outlook. After entering commercial markets in the first half of the decade, electric car sales have soared. Only about 17,000 electric cars were on the streets in 2010, and by 2019, that number had increased to approximately 7.2 million, and 47% of which were in China. There is a reason why China currently has the largest electric vehicle market. We can see here that they have the most infrastructure in place, and private electric vehicle slow chargers, publicly accessible electric vehicle slow chargers, and publicly accessible electric vehicle fast chargers. What you see here is two scenarios in its possible growth. One on the left, which incorporates existing government policies, and on the right, following sustainable development and climate goals. This is growing about 25 to 40% annually between these two scenarios. And what's driving this trend is the hope in reduction in emissions, and this presents a huge opportunity for NIO to grow in the electric vehicle industry. So what happened that made the stock jump so much in such a short period? It all started around the third week of May when there was news about NIO presenting a live show on May 18th, which brought in a total of 320 orders, 5,288 test drive appointments, and sales valuing 128 million yuan. Orders continued to grow after the show and sales reached nearly 150 million yuan by the next day. This was followed by a mixed quarter with very positive outlook. NIO had missed revenue estimates but beat on bottom line through cost controls. Q1 delivery numbers were weak, where the company delivered 3,838 vehicles compared to 8,224 in the fourth quarter of 2019. Although this may not be a good comparison because Q1 is generally lighter, but if we compare with last year's Q1, it's 3,989 vehicles, so it is slightly decreased as well. The decrease was largely due to the global health issue hitting China a lot earlier than in the US. What's really positive from the earnings report is the company expects to deliver 9,500 to 10,000 vehicles in the second quarter, and that would represent a record performance for the company. The company also expects that the sales in the second quarter will be between 475.7 million to 499.1 million USD, way exceeding the 350.9 million consensus estimate. Just days after the earnings report, the CEO Bin Li told Bloomberg that the Chinese electric vehicles market sees rival Tesla more like an ally than a competitor, pointing out that the two companies are working to grab the market share from gasoline-based automakers rather than from each other, and that the NIO sales kept growing since Tesla started production in Shanghai. Bin Li confirms that it sees that the long-term outlook for the electric vehicles market in China remains the same despite the temporary impact of the global health issue. After all the positive news, Goldman Sachs upgraded the stock to a buy, and the stock rallies 15% higher. And as that's not enough, a day after, NIO provided their May delivery update, and it was a record month for them. NIO delivered 3,436 vehicles in May 2020, representing a strong 215.5% year over year. The delivery consisted of 2,685 ES6 and 751 ES8s. And this month alone was just slightly less than the first 3 months of delivery. What's also very positive from this news release is Stephen Fang, CFO, comments, "We expect to achieve the delivery goal for the second quarter 2020, while continuously improving gross margins and narrowing operating loss." And then finally, somewhat negative news. Announced on June 11, completed on June 15, the offering of 72 million American depository shares, each representing one Class A ordinary share of the company at a price of $5.95. That's approximately 428 million USD from this offering. Generally speaking, issuance of shares is not a positive sign because it would dilute shareholder ownership, like more people sharing the pie. The cash is said to be used to fund its investment in NIO China as well as to meet working capital needs. Previous to this financing, on April 29th, it was announced that a group of strategic investors will inject 7 billion yuan, which is approximately 989 million USD, into NIO China. And per analyst Min Shen Li, he believes that the cash would be sufficient until 2022 or 2023, although I have a more conservative estimate based on their cash flow burn rate. And perhaps the stock price has gone up because of Tencent, world's largest video games company, purchasing the shares in June. It appears that Tencent purchased additional 1,680,000 shares totaling 10 million. That's an average cost of $5.95, and now Tencent owns about 15.1% of NIO. And just today, June 24, 2020, Goldman Sachs downgrades the stock because of valuation concerns, and just 3 weeks ago turning bullish. Analyst cites that since turning bullish, NIO completed a share offering with net proceeds of $475 million, or 77% more than expected. And the stock price dropped 5.25% today, falling along with the rest of the market. First half of 2019 deliveries were horrific, and you can tell by how the stock price behaved in 2019. The company was really struggling, but the second half was a lot better, when you can see the sales consistently grew month over month, except for the first quarter of 2020 because of the global health issue. It appears that China has reopened after the global health issue, but if the country is hit again with a second wave, the deliveries may again take a dive. There are currently government incentives and subsidies for purchasing electric vehicles in China. I wonder how this would impact the sales of NIO. This would be something interesting to see. There continues to be tensions between US and China, and previously US Senate passed a bill that could essentially ban many Chinese companies from listing their shares on US exchanges or raising money from American investors. With the fall of Luckin Coffee due to Chief Operating Officer falsifying sales, there may be a reduced investor confidence in Chinese companies, worrying that the same could happen to NIO. Now let's look at some of the quantitative analysis. Sales has increased 58% from 2018 to 2019 from 4.9 billion RMB to 7.82 billion RMB. The net loss was at a record of 23.3 billion RMB in 2018 and decreased by more than half to 11.4 billion RMB in 2019. The sales increase appears to be good, but the significant net loss presents a concern. We can see more details here. The Q1 fiscal 2020 financial results currently shows that the cost of the vehicle is higher than the sales from that vehicle, and the negative gross margin presents a concern. But per management, they are expected that the gross margins will improve. In order to do so, NIO would have to increase the price of the vehicles or reduce the cost to manufacture the vehicles. With the recent positive news, analyst expectations has improved, and now projecting a 71.5% increase in revenue for 2020 despite the poor Q1 results, and is expecting to grow 52.5% in 2021. We can also see the earnings loss contracting and getting closer to profitability for fiscal 2020 and fiscal 2021. Balance sheet of March 31st, 2020, we can see here that there's approximately 547 million USD short-term debt and needs to be repaid within a year, but the company only has about 340 million of cash. And perhaps this was the reason for the financing discussed earlier. And it is expected with the recent financing that they should have enough liquidity at least until fiscal 2021. And this is based on 1.4 billion USD negative free cash flow rate in 2018 and 2019. Now let's look at the stock chart. The stock has performed very well recently with the positive news discussed earlier. It went up 189% in the last 3 months and 109% in the past month. Now let's look at some of the valuations. Tesla is worth about 178 billion and NIO is worth about 7.8 billion. There weren't a lot of metrics to look at since NIO does not have positive earnings. But if we compare current price to sales, they are pretty close to each other. Tesla with price to sales ratio of 7.47 and NIO with a price to sales ratio of 6.97. But if we use their 2020 and 2021 estimated sales, NIO trades at a cheaper valuation. I believe that Tesla trades at a premium compared to NIO is because Tesla is more well established with a lot more research and development and is also profitable with a lot more sales and deliveries compared to NIO. Conclusion. In my opinion, at today's price of $6.86, I think it is a speculative buy because of the following reasons. NIO is within the fast-growing electric vehicle industry with the expectation of growing between 20 and 40% in the next 10 years. NIO has a strong presence in China, and China is the largest market for electric vehicles. The trend for zero emissions is real, and many consumers are moving towards this trend. There is a network of charging stations across the US and China, making it convenient for consumers to charge their vehicles. NIO also has other solutions for charging their vehicles, such as through the battery swap, which just takes a few minutes. NIO had record May deliveries and is expected to continue, expecting between 9,500 and 10,000 vehicle deliveries for Q2, which represents record quarter. They also have an expected 71% growth in sales in 2020, even with the global health issue impact, and expecting 52% growth in sales in 2021. Management expects to improve gross margins and narrowing operating losses going forward. The valuation is very reasonable compared to competitors, trading at around 4 times next year's sales. They appear to have a very influential management team. Bin Li, CEO of NIO, is recognized as one of the top 10 most influential and distinguished people in China's automobile dealer industry in the past 20 years. And some of my concerns include the risk with the global health issue and the possibility of decreasing demand for electric vehicles. And also, when government incentives and subsidies are gone, sales of electric vehicles may drop. Another concern is the huge shares offering in April and June, which diluted shareholders' equity. Although there likely isn't a liquidity issue in the near term, once the cash is burned out, there may be further financing and dilution of shareholders' equity. This may be something to look beyond if they can continue to execute and deliver. Competing with Tesla. Tesla is well established and have been in electric vehicles for many years. Competition is good for consumers, and now consumers have more choices and perhaps finally a shift from gas vehicles to these alternatives, and both can benefit from the changing environment. And this appears to be a trend as discussed earlier. Despite management suggesting that gross margins will improve and operating costs will narrow, gross margins are still negative, meaning that the cost to make the vehicle is higher than the cost that they sell the vehicle for. Tensions between China and US may have an impact on their business, whether through the supply chain or ability to raise funds. There could also be lower investor confidence in Chinese companies due to Luckin Coffee scandal, where the COO falsified sales. Disclosure: I currently do not own any shares of NIO, and I haven't decided whether I would be buying any shares in the near term. I do see a lot of potential with NIO, but it does come with some risks. I will continue to follow this company going forward and provide you with any news updates. And that's it for now. I've spent a lot of time preparing for these videos, so I would really appreciate if you could like, share, and subscribe. Thank you for watching. Until then, see you next time.